Hey everybody, Rob Maurer here, and today we are discussing an update from Electrek on Tesla's second quarter sales. We also have an updated 13F filing from Baillie Gifford, formerly the largest external shareholder of Tesla. We also have some possible changes to Tesla's referral program, some news out of China, and one other story as well. Tesla stock, after popping up in the pre-market from Electrek's story this morning, did fade throughout the day, finishing down 1.1% to $663.54. That compared to the Nasdaq, which recovered to end the day, finishing up 0.4%. Alright, so getting into the Electrek story, this was published about 3 hours before market open today. Article headline reads, Tesla's demand is through the roof, already sold out this quarter. Electrek writes, quote, Tesla is currently seeing exponentially strong demand for its vehicles, as it is already sold out for the quarter according to sources familiar with the matter, end quote. Expanding on that, they also write that, quote, sources familiar with the matter told Electrek that Tesla communicated to employees that production capacity for the second quarter is already sold out, with still almost 2 months left in the quarter, end quote. This would follow Elon Musk's comment on the Q1 earnings call at the beginning of last week where he said demand is the best they've ever seen. Now, it's not really unusual for Tesla to be quote-unquote sold out for a quarter. I would say it happens most quarters, in fact. But generally that happens in waves in accordance with how Tesla decides to prioritize shipments of their vehicle. For example, we're now 5 weeks into the quarter. At this point in time, it would be pretty typical for maybe international deliveries to be sold out, as Tesla would be prioritizing the production for overseas markets so they have time to ship it and deliver it within the same quarter. Then a few weeks after that, we might predominantly see the East Coast being sold out, and then Tesla just prioritizing production for delivery in California, where that turnaround time is the fastest. So selling out for an individual quarter wouldn't be anything new, but to do it at this point in the quarter, again just 5 weeks in, would seem to be, probably the earliest we've seen that happen in the last couple of years. Oftentimes in past quarters, we've also seen Tesla offer a small quarter-end incentive to make sure that people either take delivery when they're scheduled or as a way of balancing demand in a specific location, because Tesla will often ship vehicles before they actually have orders in anticipation of demand in that location. But of course, you can never forecast those things perfectly, so some of those quarter-end incentives can help balance those out. Notably, I didn't see any indication of Tesla doing anything like that in Q1. So that, alongside Musks Comments, is of course another strong indicator of demand that would then carry over into Q2, making this news seem that much more plausible. A couple of quick counter arguments. So if you look at Tesla's actual design studio right now for the Model 3 in the US, they're estimating 5 to 8 weeks for delivery. For the Model Y, 6 to 8 weeks. That would be from mid-June to the 1st of July. So Tesla right now for new orders is still estimating that those would be delivered in Q2. But of course, as we know from looking at the design studio over the years, these figures are not always the most up-to-date. Sometimes they do make changes that clearly have been done manually, and in those cases I do think it's valuable to look at, but I don't think we've seen that on the Model 3 or the Model Y recently, so I wouldn't say that alone disqualifies this report from Electrek. My bigger hesitation would actually be, what was the source of this information? If this was from the stores channel, so the delivery channel, then perhaps it was specific to that location. So I don't know, maybe this is coming from someone on the East Coast and Tesla has told them, hey, any new orders at this point in time probably aren't going to be delivered this quarter, which wouldn't necessarily mean Tesla's sold out for the quarter. It would just get us back to our sort of delivery wave prioritization thing that we talked about a second ago. With how Electrek has reported this and how we haven't really seen it from any other sources, I don't think there was an all-company email or anything like that. Electrek would usually share at least a portion of that text, or we would see it pop up somewhere else. So this seems like it was more conversational, and maybe just from one source or two, which would make some of that localized communication, I think, more likely. At the end of the day, though, I don't want to spend too much time speculating on it because it doesn't really matter. I think we know since the Q1 call, demand is strong. Tesla will sell everything that they can make this quarter, though we shouldn't be too surprised if inventory does start to increase a little bit. They're super low right now, just 8 days of supply. So if production were to outpace deliveries this quarter, wouldn't mean any concerns on the demand front. All right, moving on to the next piece of news. Today we have a new 13F quarterly filing from Baillie Gifford, managers of billions and billions of dollars in assets, and at one point, the largest external shareholder of Tesla. Over the last few quarters, they have been reducing their position in Tesla. As Tesla's market cap has grown, they've been trimming to bring their allocation, total percent of their portfolio, back in line with how they try to manage their funds. So today we got their 13F filing for the first quarter, showing all their positions at the end of the quarter. And over the first quarter, they again reduced their position in Tesla, this time by 40%. They sold just over 11 million shares of Tesla in Q1, leaving them with about 16 million remaining. So Tesla was the position with the biggest allocation reduction for Baillie Gifford this quarter, a 4.6 percentage point reduction. Kind of interestingly, NIO in a distant second at just shy of a 1 percentage point reduction. But even after reducing their stake in the company by 40%, Baillie Gifford still holds Tesla as their top holding, again 6% of the portfolio, about $10.8 billion invested in Tesla. So still their top holding, but much more in line now with the weightings of their other positions. They've got a number of stocks here between 3 and 5% of the total. I don't think we've seen any comments here yet from Baillie Gifford portfolio manager James Anderson, but when Baillie Gifford has made these adjustments in past quarters, Anderson has pointed out that the adjustments were made to reduce the weighting to avoid being overly concentrated. And last September he said, quote, "However, we intend to remain significant shareholders for many years ahead. We remain very optimistic about the future of the company. Tesla no longer faces any difficulty in raising capital at scale from outside sources, but should there be serious setbacks in the share price, we would welcome the opportunity to once again increase our shareholding." End quote. So selling 11 million shares this quarter I'm sure has weighed a little bit on Tesla's stock price, and I wouldn't be surprised if we continue to see a little bit of selling from Baillie Gifford in coming quarters, especially if Tesla stock starts to increase again. But even if they were to continue to do that, the impact would be far less significant than what we saw here in Q1 now that the weighting of Tesla is much more in line with the other companies in Baillie Gifford's portfolio. All right, next up here, we've got another report from Electrek saying that Tesla is, quote, completely revamping its referral program after already spending $23 million on free supercharging miles this year alone, end quote. All right, so let's pause there and just check that number out. So $23 million sounds like a lot for a company like Tesla that did, $30 billion in revenue, not quite as much. But if we just look at a hypothetical example, I think that looks pretty reasonable. So if we say Tesla sold 500,000 vehicles last year, let's say 3/4 of orders use the referral program. I'm guessing most people do since it's so easy to find a code. So each referral means 2,000 free supercharging miles, 1,000 to each party. So all of a sudden you're at 750 million free supercharging miles. Let's say that 1 kilowatt hour gives you 4 miles. Then you're at 187 million kilowatt hours. Then if each kilowatt hour costs Tesla somewhere around, 12.5 cents, put whatever number you want there. Obviously Tesla charging more than that, but if it were 12.5 cents, that would be a $23 million referral cost. However those variables mix out, it looks reasonable, and then you're going to have some for Tesla Energy as well. Now, of course, not all these miles are going to be redeemed, but Tesla does still have to account for them and the possibility that they are. Anyway, about the program, Electrek here says, quote, according to a source familiar with the matter, Tesla plans to eliminate referral links, which owners often spam on social media, and instead turn to an app-based referral program promoting in-person referrals, end quote. So Electrek is positioning this article as though the $23 million is too much spending. I think that's probably a faulty assumption. At least I really hope it's a faulty assumption because the spending on the referral program isn't like spending on advertising to generate sales. The problem with advertising is that money goes to a third party and that increases costs for the actual customer. But with the referral program, that money is going to customers and reducing the cost of charging. So if you combine all customers into one pool, it's actually net neutral in terms of costs. Another way of saying that, it doesn't increase the cost of Tesla vehicles. With it being net neutral, there's no too expensive, it's just a matter of where those expenses are being accounted for, whether that's up front or on the charging end. But that's at the overall level. What this does do is shifts costs a little bit between customers. So someone like me with a lot of referrals, for example, I have a cheaper cost of ownership from less charging expenses than somebody that does not have any referrals. Now, in my case, I think I've certainly provided enough value to justify that, but it definitely doesn't mean there's not a better way to structure this. And I think that's where Tesla's approaching this from, not from a, oh, this is too expensive perspective. Obviously, a significant chunk of people, I would have to guess probably the majority of people, are putting in referral codes that we're going to buy a Tesla anyway. And if you're already researching online, is that free 1,000 miles of supercharging really what's going to push you over the edge on buying a $35,000 plus car? Probably not. So as an investor, I certainly don't mind how it's structured right now because I don't think at the end of the day it's a net cost to Tesla, but if they think they can do something that is going to be a little bit more beneficial, I certainly welcome them looking into that. Electrek says, quote, the plans are still not entirely clear, but Tesla plans to update its mobile app to have more features for non-Tesla owners. It is going to facilitate test drives, and current owners can link their account to the new user's app to give test drives, and if those new users end up ordering a Tesla, the current owner will be rewarded, end quote. So I think that's a really good idea in theory to encourage and incentivize current owners to give and share that hands-on experience. That's where people that were doubting Tesla before might actually become convinced and actually be a true referral. So those are probably the most valuable interactions that Tesla could encourage. Because of that, I do think it's likely that the referral program does move in that direction, so it'll be interesting to see what Tesla comes up with. All right, next up here, we've got some news on Tesla in China. Reuters is reporting, and I could have swore we already talked about this, but Reuters saying that, quote, U.S. electric vehicle maker Tesla Inc. said on Thursday it was developing a platform for car owners in China that will allow them to access data generated by their vehicles, end quote. So obviously this comes after the whole brake failure shenanigans. Again, I think we had talked about this, but it looks like Tesla continuing to move forward on those plans. And hopefully this ends up being a great example of more transparency, alleviating any conflicts like that in the future. So it's tough to see how this could be bad for Tesla, but I think whenever you give out more information, it does expose you a little bit more and potentially could provide some fodder for people that want to use that information against you, whether representing it accurately or not. All right, last story here today. I just kind of feel like I have to talk about it because I think I was tagged in, like 500 different tweets on this today. But in case you missed it today, Gordon Johnson had a rather revealing tweet in reply to a tweet from Phil LeBeau saying that Jim Cramer sold some of his Ethereum after record highs to put it toward an all-electric Hummer. We'll set that aside for now, but Gordon Johnson replying saying, "Hey Phil, this is great for Cramer and great for GM. My dad was a lifelong executive there, and I love that company as they treated our family great, but is this newsworthy?" So perhaps not, but the admission that Gordon Johnson's father worked for GM appears to be big news in the Tesla community. Very well could be. I don't really know much about the disclosure laws there. Maybe it matters, maybe it doesn't. Would have been nice to know for sure. What I think is interesting though is that Gordon Johnson deleted the tweet. That in and of itself is a red flag. If it didn't matter, why delete it? But yeah, I don't think anyone would find this too surprising. I don't know, maybe I'm just completely numb to this stuff. I feel like I don't really care about this. Maybe I should care more. But I judge a person's point of view based on the merit of the points that they're making, not based on where their parents work, regardless of the bias that may lead them to have. On the other end of the spectrum, it's like people discounting me because I invest in Tesla or because I have a podcast called Tesla Daily. Yeah, there's bias there, but who cares? Like, listen to what I'm talking about and decide if it's valid or not. I do agree that the disclosure of those things is important just to understand the full picture. So I guess I agree that the non-disclosure is upsetting. I don't know, I'm talking in circles here a bit, but hopefully the essence of what I'm saying is cutting through. I don't know. Anyway, the other thing that I saw on Twitter today is people then tracking down who they believe to be Gordon Johnson's father on LinkedIn. There's some executive named Gerald Johnson, an EVP at GM. People are now convinced that this is Gordon Johnson's dad. First of all, Gordon Johnson in his tweet said that my dad was a lifelong executive there. Gerald Johnson still works there. So that would be pretty weird phrasing. And then second, there's an article here from cleveland.com that Reddit username I not regret found, which is basically a personal profile of Jared Johnson. And in it, this was written in 2014, he mentions being a father of 7, ages 14 to 22. So unless Gordon Johnson is only 29 or this article got something wrong, then that's probably not his dad. Plenty of reason to at least question it. So I would just urge people to take a second to be cautious on things like this in the future. When information like this spreads, it makes people look bad if it's not accurate. And by people, I mean the entire Tesla community. And we already know his dad worked for GM, so who really cares exactly which person it is? Doesn't matter. So yeah, those are my mixed thoughts on that subject, but I'll probably leave it there for today. I'm feeling a little better, hopefully fully better tomorrow. Again, thanks for all those well wishes, but that'll close out for today. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and I'll see you tomorrow for the Friday, May 7th episode of Tesla Daily. Thank you.